I'd like to welcome all of you. It's a great crowd tonight. The last meetup this year. Our speaker tonight, Mona Elisa. She has been working with Goldman Sachs for quite some time. She was very successful there. She was one of the top 30 under 30s listed in Forbes Magazine as well, in a time where it was very difficult between 2008 and 2011 to actually make money in that field. Since 2014, she is actually interested in the crypto scene and blockchain scene. And today she's here to actually promote her own project. So it's quite interesting how quick she turned this around. And I'm going to let her take over now and tell you more about it.
We call it the Mellon project, and the Mellon project comprises of the Mellon protocol. I see you all looking at the slides, you don't have to look at the slides yet. The Mellon project consists of the Mellon protocol, or the Mellon software, which is a blockchain software for asset management. And it also consists on the side of a research project into connectivity and Internet of Blockchains. One of the ways we like to look at the whole space is we see the evolution of the space starting with Bitcoin, which introduced the concept of blockchain accounting to us. And then we saw the evolution of that to Ethereum, which embedded an entire coding language inside it and gave us the introduction to a blockchain computer. And we're starting to see different types of blockchain computers emerging in the sense of private consortium blockchains or zero-knowledge proof chains or whatever. And it seems to be more and more every day you hear of another one springing up. And when you have a computer, I guess the next logical step is to build software on that computer. So that's where we come in, and we're building blockchain software for asset management. And we see the future of somehow connecting these different blockchains together. So we have a truly holistic picture and real connectivity while still being able to leverage off the whole blockchain technology and the beauty of it. So what does Mellon do? There's 4 things that I see that the Mellon protocol offers. So the first thing is it allows you to set up your own fund. And when I say that, it basically comprises of a set of rules that once you choose them, you basically can't ever change them. So they set the parameters and rules by which your fund can act. And it puts them all together into a fund structure. It then allows you to manage the fund. And so basically the fund manager or managers can only ever act or manage the assets of the fund in a way that's compliant with the way that you set up the fund structure. And these rule sets are enforced by blockchain technology. The third thing it enables you to do is to build a track record. And so for people like me who come from traditional finance, we kind of appreciate how hard that can be because the barriers to entry are very high. But thanks to blockchain technology, you can sort of start to build an auditable track record. For now, probably only in the crypto space, but increasingly day by day, there's a lot more assets that you can play into those kind of portfolios. And so that's another beauty of Mellon. And lastly, another cool factor is that you can invest in other portfolios. So if you have a little bit of an interest in the space, but you don't necessarily want to keep in touch or on top of every single token issuance coming out, you can basically just monitor your favorite managers by performance and your own criteria, perhaps, and invest in them instead. So that's kind of a summary of the 4 things that the Mellon protocol aims to do. So how does it work? So basically, the protocol is set up in a way where you have a non-negotiable core, and every single portfolio has to consist of this core. And basically, this is the really non-negotiable part of the fund, and it's basically how the NAV is calculated so that it allows standardized calculations of performances, and it allows easy comparisons between the different performances. It also glues everything else together in a very coherent way. And then you have the modular elements, and this is where we believe that there is room for opinion, and people should be able to decide how they want their fund to look like. So we, as Melonport, are building the first set of modules, which should be able to give any fund manager basic usability and functionality. But it's an open source protocol, so basically we also, and we don't censor anyone building onto it or integrating it into the user interface that we have. And basically anyone's allowed to build modules of their own use sets within the different kind of classes of modules. So different kinds of classes might be management and performance fees, exchanges, so which exchanges is the fund manager allowed to interact with. One really cool feature, for example, is the asset registrar function. So this predefines which assets the fund is allowed to invest in. This stops fund embezzlement, stops the fund manager, for example, for just transferring the funds to someone else's account or to his own another account he may have. And it also could link in future to things like KYC, AML, or identity management type chains and protocols. So that's kind of how it comes together. Because everyone's building their own module sets, or we imagine the future where everyone will be building their own modules on top of Melon protocol, we really allow people to build their own brand and reputation. We expect that these modules will be reviewed by people who have used them. And we allow people to charge whatever they want for their modules, with the risk, of course, that someone can always copy them and charge less. But there's absolutely no kind of restrictions or impositions from our side, and we don't take a cut of the fees either. So that's kind of how it works. And we also describe the Mellon protocol approach as a blockchain on blockchain approach, which basically might sound a bit strange. But basically what it is, if you think about how normal blockchains work, the protocol basically is there to make sure that someone doesn't put $1 million extra in their account that doesn't actually belong to them. And the miners are there to ensure the orderly process of transactions. In the Mellon's case, there's also an inflation of coins. So we'll have an initial fixed amount of coins, and once we deploy to the live net, we'll have an inflation also built into our governance structure, and those coins will all go towards developers who add the best modules to the network. And the best modules are measured as the modules which are being used the most by fund managers. So by doing this, we believe that we future-proof development. We recognize that we're not able to deliver everything on our own. This is an absolutely huge vision and project, and so we kind of structure it in a way we believe that we incentivize all developers to work on site together in this project, and hopefully the rewards will look attractive enough to ensure that there's a continuously improving ecosystem of modules for people to use. So what are the motivations of Mellon protocol? So initially speaking, we're targeting crypto managers, of which we're seeing more and more evolve on a daily basis. Apart from kind of on the individual level, you're seeing big headlines. I think there was one a couple of days ago. Olaf Carlson just raised 10 million for his crypto fund, and you're seeing more and more of these headlines every day. And this kind of offers them a clean and nice solution one day to basically manage these assets and gain recognition and visibility in a decentralized way. So that's one of the motivations. It's kind of a play on the increasing number of crypto managers out there. Because it's, I think, currently the first and only still decentralized proposal out there, truly decentralized proposal out there. It's also kind of cool because you don't need to trust anything apart from the code. So that's another motivation for doing this. And yeah, as you see, the number of digital assets, I think it's now around the 600 level, and it's increasing day by day. Market caps are also increasing on a day basis and hugely volatile, but it's also still a very young market. But we really believe that the future is in this space, and we also really believe that with the increase of private companies starting to collateralize assets on the blockchain, the pool of assets will only grow larger and larger and make it more interesting for even traditional managers one day to start using this kind of software. So those are the motivations behind it. So in summary, some of the properties of Mellon are, I believe it's open and transparent. So just to recap, open source protocol. Everything can, in terms of strategy, before you invest, upfront, and you can see what the fund is and isn't allowed to invest in and do, and potentially even risk limits and stuff like that. And also, very interestingly, the standardized track records. It lowers costs and time. This is probably slightly more relevant for the traditional asset management industry, given the extremely high barriers to entry. But, in a world where decentralized exchanges kick off, also, the large commissions you see on centralized exchanges also starts to vanish. It's modular and inclusive, so we recognize the need for opinion, and we allow everyone to build on Mellon. And it's decentralized and reliable. So all you need to trust in really is the code. You never actually have to trust us, and we never touch your assets. So that might be an appeal for some of you. So the development of Mellon. So till now, Rito and I have worked on this for the biggest part of this year alone. Sometime early next year, we'll conduct a first token issuance to raise money for the next phase of development. So we'll have an alpha version, which I'm going to show you a demo of at the end. It's actually an old demo, but it's still worth having a look at. And the token will enable you to a usage right to use the software. And again, those tokens will be collected and distributed to the developers who are adding the most to the protocol. So the idea of the token is you also benefit from the network effect. So on a 2-year objective, we plan to conduct the next phase of development. That's the prototype, which I'm going to show you at the end. We'll also start documentation, heavy documentation and user manuals on how to use the protocol. Ease of usability, actually that's probably in line with the prototype. So for people like me who are not coders, we need an easy way to access these smart contract codes. And that comes in the user interface website, which is Melonport. And it's a really user-friendly way of setting up and managing your fund. We also, of course, have to start and continuously engage in a series of security audits to make sure that the smart contracts we release are as robust as can be. So that's another part of, or another idea behind raising a little bit of money at the start of next year. We'll also continue to maintain the network for at least a couple of years and engage in communications and marketing. And very importantly, as I mentioned to you before, our very strategic longer-term view is that all these blockchains will eventually connect in a trustless way. And so I think the idea is that we want to set aside a portion of our funding to research and explore these connectivity solutions to make sure that Mellon can eventually connect to other blockchains in a trustless way, so that the software can, A, really access all the different types of assets out there, even if they're on different blockchains, and B, also that if users may have a different use case for using a different blockchain, for example, if you're setting up a high-frequency fund, you might want to be on a super fast blockchain, and maybe Ethereum is not fast enough for you. Maybe some people are super private about their strategy and they want to be on a zero-knowledge type kind of chain, which may suit their strategy more, etc., etc. And basically, we want to be able to direct the Mellon tokens to the developers who start to implement the Mellon code on other future blockchains as well. So that's the real idea behind putting aside some funds in order to make sure that we're always constantly working on these solutions. So that brings us kind of to Polkadot. But just as an introduction, why I think we've covered most of this we have actually covered most of this. So as most of you already know, it became evident a few weeks ago that we were working on a collaboration together with Parity Technologies and Gavin Wood. And a large part of this collaboration, other than the fact that Gavin serves as an advisor to our company for a few months, is this exploration of Internet of Blockchains. And we believe that Polkadot is probably one of the most promising connectivity solutions out there, and it's a very interesting concept, which I'm going to touch on for the next few slides. So how does Polkadot work? So there's this concept of a relay chain and a parachain with Polkadot. And the relay chain is basically the chain that maintains all the data that's moving from chain to chain, but also keeps a record of all the chains blocks that are being published, so the canonicalization of every single chain connected. And a chain that's connected to the relay chain is called a parachain. And any chain connected to the parachain, in theory, can trustlessly interact with other parachains. So essentially, a parachain is defined in the Polkadot paper as any globally coherent validatable data structure. And the pretty cool thing about it is these blockchains or parachains that can connect can have wildly different properties. So they can be proof of authority, consortium, private, or public chains. And there's like three main roles that basically look after the Polkadot network. I think you can kind of see it in this diagram. All these kind of, the relay chain is the one in the middle, and all these kind of 4 chains connecting are different types of chains. They're represented by different colors and shapes to just emphasize how different they can be in characteristics. And basically the only requirement for a parachain, a new parachain, is that it provides a proof of validity to the relay chain. So rather than providing the consensus mechanism, it just needs to pass on the validated blocks. The relay chain then takes care of the consensus part of it. So basically, these chains basically can design themselves in a way that they just provide the proof of validity to the relay chain, and then the relay chain, and they outsource the consensus mechanism to the relay chain. That leaves the question, what about existing legacy chains? And basically, this is not a fully solved thing, but it's probably one of the more comprehensible pieces of work that we've seen out there. It's not as easy, but basically, because the consensus mechanisms are already embedded in the ecosystem of Bitcoin, for example, and Ethereum, but it's not impossible, and bridges can be built, as you see at the bottom with Ethereum, with a fairly high degree of certainty with Ethereum, a little bit harder for Bitcoin, but not impossible. So in terms of the solutions we've seen out there, we think that that's a pretty cool solution. And one other thing I think it's also worth noting is that Polkadot is both scalable and extensible. So that's something also we haven't seen in all the solutions out there. So timeline. February next year, actually early next year, we hope to release the alpha version of Mellon. That will be sort of publicly announced in February. We'll issue a very limited amount, a limited amount of tokens for a small amount of money to get to the next phase of development. In Q2 next year, we hope to have the initial prototype, as well as having performed a bunch of audits on the protocol, and to be able to ensure by that point that which things we should be focusing on in terms of security. And at that point, we'll be releasing further documentation early next year as well in much more detail about what exactly we plan to build in the next 6 months, 12, 18, and 24. But those involve some pretty cool things like kind of an app store capability where you can kind of read reviews on different modules by people who have used them, people who have tested them, and rated them. You'll also be able to explore different fund managers and performances sorted by different kinds of criteria, so that will all be built in via the Melonport website. And also some other cool features that we hope to launch. So one of the big things will be kind of having some, during the beta testing phase, we hope to have some partners, crypto fund managers who've already approached us and may be interested in beta testing with us and maybe launching the first one of their a decentralized solution to their fund management strategies. So we hope that in doing that we'll also get a lot of feedback and be able to continuously improve the project. And finally, I mean, I'm going to probably end by saying, we fully recognize that we can't do this all alone, and therefore we really encourage you to join us in our Slack chat, on Twitter, on Gitter if you're a developer. I tend to stay away from that chat. But basically we could do with all the help possible, and on all kinds of levels, whether it's developing, whether it's marketing and communication, whether it's on the asset management side, whether you just have some other ideas that maybe we haven't thought about. But please feel free to join our community, and we'd love to hear from you. And with that, I think we'll take some questions.
I'm sure there must be many questions. Come on.
I was wondering, is a parachain a little bit like a sidechain on the Bitcoin network?
It has similarities, yes, but I think from memory, sidechain, Rita, do you remember the difference? I think, I forget, it's either that the sidechain is scalable but not extensible, or vice versa. I can't remember. But it's a similar idea, but I think it takes it maybe a step further.
So this is for asset managers, yeah? General asset managers, or just the crypto side, which you were sort of mentioning at the end?
Yeah, so I mean, I think initially we're definitely targeting crypto managers initially. But having said that, we're starting to see all these kind of traditional assets be collateralized on blockchain. And one of the ideas for engaging with projects like Polkadot is that we believe the future is, stocks and shares on blockchains and bonds and whatever. And the way that traditional financial markets work, as we know, is highly inefficient and costly. So I think as that starts to happen, we can basically expand Mellon protocol and software to other blockchains and leverage off all these other assets, which doesn't make the portfolio anymore 100% decentralized necessarily, but you benefit from the efficiencies.
Yeah. So just to follow on that, so for the first, let's say, 2 years, trying to implement the protocol and build a business, you're looking at how many fund managers globally, potentially?
In terms of large crypto managers, and I define a large crypto manager...
10 million.
I was going to say 1 million. But, okay, let's say...
1 million. That's
okay, let me say 1 million. I would say we've probably been approached in the region of funds from 1 to 25 million, I think is the largest one I can think of.
Who's the largest? No.
Who's the largest crypto fund?
Yeah.
I think it's a $1 billion family office in New York. And we haven't spoken to them directly about Mellon protocol, but I know that they may be looking at seeding a new fund, which will be announced next year. It's targeting...
What's a crypto fund is investing in?
It's more a kind of, like a crypto billionaire, I guess, who has put his money in a family office and investing in lots of crypto assets. It's targeted mainly at crypto assets. So I think the largest I know of is about $1 billion.
Somebody who made money with
Yeah,
with
yeah.
Bitcoin.
Yeah,
Maybe.
probably several
And then
times. Yeah.
investing into like any kind of.
My understanding
startups.
is now he's investing in lots of different diversified crypto stuff, and I know probably other people who are doing the same, who made a lot of money in the space
How
as
do
well.
you find it? It's a notion.
How are we financed? We've been completely self-financed this year. We have been offered a bit of
Your partner.
me and Rito, yeah. We have had some offers for pre-funding. We've actually turned them all down because we didn't want to give anyone preferential treatment. We're basically, and also we didn't want to slow ourselves down. We've actually moved at a very fast pace this year, partially because we haven't allowed ourselves to be distracted. But next year we'll sort of collectively do it all in one go, hopefully. Well, actually not all in one go, but the initial stage in one go.
How do you plan to make money?
How do we plan to make money? Good question. Well, hopefully, starting next year, we'll be able to fund ourselves and the company for a 2-year project via the contribution period. After that, when we deploy to the testnet, to the live net, as I mentioned before, any module developers basically receive Mellon tokens via inflation. So we hope, and maybe we're taking a bit of a bet on ourselves, but if our modules are good enough to be kind of the default for when people are setting up portfolios, then we'll earn Mellon token. I'm not sure if that will continue to be our only stream of money, but we haven't thought beyond that, to be honest.
Okay. Sorry, next question.
Yeah, sure.
Well, why did you choose to use inflation as a means of? I mean, it comes at the expense of everyone else who participated.
That's true. That's true, but it hasn't had a negative effect on Bitcoin or Ethereum, and it's provided a lot of security because you have to incentivize the miners to keep both those blockchains safe. And one of the reasons they're incentivized is because of this inflation. And I guess the idea behind having an inflation on Mellon is that we really recognize that we want the best talent on our side. And in order to get the best development talent, because this is such a big project, with so many different iterations and types of modules that can be made, we need to incentivize them. On the flip side to that, when you're using the network, you need to pay a usage fee in Mellon tokens, and ideally, you could argue, with Ethereum, it's kind of like gas in Ethereum. If it takes off, you'll still see a slow and steady increase in the value of Mellon, as long as the user base kind of starts to grow and take off.
You are depending on Polkadot, aren't you?
No, not 100%. We're further researching it. Polkadot's just released a white Polkadot paper, and now they're engaging in a feasibility study, and we believe it's one of the most promising things out there from everything we've read. We'll engage with them very closely on the research side of things, but I think it will take a few months for us to know, and we're at the same time looking at all other options.
There are other options.
Yes. Yes, like Cosmos and sidechains and BTC Relay and other stuff. But as I said, we believe Polkadot's one of the more promising ones. Cosmos is probably up there as well. But I think it's too early to make a judgment on which one is the winner in this space. And we just decided actually now to put a little bit of funds aside so that when it becomes more clear who the winner is, we can kind of move towards that direction.
How many developers you have?
One, but he's worth 5. We've had, recently we've had, I say we've been pretty kind of secluded and in our own tunnel, let's say, for most of the part of this year. But I see about a month ago we started building our community and, building a Twitter following and building a Slack chat, and we've actually started to see some volunteers emerge, which is always nice. And some of them have started to really weigh in on the project and contribute code and contribute marketing ideas and communication message, helping with the communications message, and that's been a really big relief and comes at a really good time, because with a rising profile you also, have a lot of distractions.
Okay. And no one's talked about this yet, but is there going to be, what have you got in terms of future regulatory oversight? What about that aspect? I mean, otherwise we're all going to be crypto billionaires, right?
Right, very good question. So we are simply providing the technology. We see ourselves as a software provider. The regulatory is almost impossible for us to, provide guidelines for every single jurisdiction in the world at a time when there is not much clarity on this space. So we believe that will fall on the end user, and I also feel like it will only be an issue when people start to accept third-party money. We're working very closely with our legal partners and advisors, MME, on this front, and we believe that anyone who's sort of interested in that space and wants to try setting up a fund, I'm sure they'll be able to provide that kind of advice. I actually just remembered I haven't shown the prototype. Would you guys like to have a look at the old prototype? Okay, let's see if I can get this up. Did you have a question? No.
I have a question. So what's the timeline for securitization of all the other assets? I mean, it's going to be like more than years.
Securitization of like traditional
non-crypto
assets? Oh, I have no idea. But I mean, we built it initially for crypto, and then with solutions like Polkadot out there, we can easily, hopefully, expand that to cover traditional assets. I think it will probably be some time. But then, having said that, I'm the worst predictor in this space. I said. I said in May, like, oh, it's going to be, I made a bet with Rito in May. I said, I bet it's going to be 2 years. Within 2 years, someone's going to have discovered how to collateralize euros on a blockchain. And then the next day, Decentralized Capital announced that they've done it. And then a week later, Santander announced they're about to do it. And so my 2 years was completely off. And, we're starting to see, I think, autonomous and string. And I don't know what they're doing exactly, but the JP Morgan fork of Ethereum, I would imagine they're doing it for a reason. Maybe that involves collateralizing assets. So who knows, it could take 5 years. It could be announced tomorrow. I have no idea. But we prepare ourselves to go in that direction anyway. So this is an old prototype, but I think it's still worth showing. I think we're about to release the new one. So this is what the user interface will look like. Once you have it set up, you have to fund your wallet. You have to fund your account in order to be able to invest in your own fund at a later stage. Anyway, all I wanted to show was at the top right. Sorry, the colors are not coming out very well, but you can see the live status on the blockchain. So you can see that we're on the testnet. You can see that we have a good connection. This is a recording, of course. You can see the last block that was mined. And you're not allowed to create a portfolio until your account has been funded. So I tried and I wasn't allowed. Okay, so now the account's been funded, we can create a portfolio. And this is what I mean by the modules. So you choose a name for your fund, you choose a strategy, that's just a categorization thing. And this is where you can basically pre-select the asset universe that your fund is allowed to invest in. So we've just put some well-known tokens for now. And once you pre-select those and you launch the fund can only ever invest in those tokens. So this kind of prevents the fund manager transferring the money to some other account or doing something illegal with that. You then select the exchange you want your fund, or exchanges that you want your fund to be allowed to trade with. You select your price feed source. So, for example, we can imagine a world where Reuters and Bloomberg provide their own branded modules, and then that becomes an option. Depending how much you trust those brands, you might be willing to pay a higher price for those already established brands. And then you choose the management fee and performance fee, and you deploy the fund. And then basically in the background, all of this stuff is being put together in a smart contract and deployed to the testnet. And it takes 1 or 2 block times. And once it's done, it looks something like that. So you have your fund, and now you want to invest in your fund. So we're trying to put 5 Ether in there. And again, that will take 1 or 2 block times. I think actually the recording stops before the investment gets in, but basically you can invest and redeem, and on the new alpha prototype that's coming out soon, you'll also be able to trade within the fund, and there'll be a liquidity provider there on the other side. But this is kind of the look and feel, and this is kind of, I guess, how easy it would be to set up a fund. It takes a few seconds or minutes maybe in the real version, because you'll have a lot more modules to go through. But it significantly reduces the fixed cost to almost 0, and then you're only left with a bit of variable costs.
What asset classes can we buy?
For the moment, only crypto. Although, having said that, we have euros and, is it pounds?
I think it's dollars.
Dollars.
Yeah.
Euros, collateralized euros and dollars on Ethereum. So we've used the decentralized capital ERC20 tokens. And I think we have Digix as a third asset for the alpha version. So Digix, the gold token.
Ah.
Yeah. So
Backed
for
by gold, or
it's backed by gold in Singapore.
and who is issuing that?
Digix.
Ah.
It's the private company as well. Yeah, it's
Where are they?
in Singapore.
You're using the smart contracts. Are they enforceable or reversible in case of fraud, like the DAO?
That's a good question. Rito can correct me if I'm wrong, but I think they are enforceable. Actually, Rito, do you want to answer?
Sure. Yeah. So for the beginning, probably not, but like this has to be like done in iterations. So at the beginning, probably not, but we have that in mind. Seeing you set up the fund in Ether, isn't there an own currency, or can the fund be also set up with Bitcoins?
On Ethereum, currently that would be difficult because we're building this on Ethereum at the moment.
And why? Because of the smart contracts.
Yeah, because of we need the smart contracts. So all funds to start off with will be Ether denominated. Going forward with the maybe another reason why we would need the connectivity solution is because the funds could be then denominated in other currencies such as Bitcoin or I don't know if this would be possible, but one idea I recently had would be even to use the ERC20 euro tokens as a denominated currency, but I don't know if that would be possible. Still sort of exploring that.
And later, what kind of asset classes will be?
I mean, it's kind of, I mean, it could be anything. It could be, we're in talks with someone in Asia who's collateralizing real estate on the blockchain, and he's very interested in this technology he wants to be able to provide those, real estate-backed tokens on our platform. It could be things like intellectual property. It could be collateralized commodities, equity issuances. In a future world, could be done on blockchain. So it could be. The possibilities are quite infinite.
What about UK?
Which one? Sorry.
UK, the startup.
Lika, the exchange.
Yeah.
Yeah, they are currently building on Bitcoin, and I think they just started building on Ethereum. They're a fantastic project, and I hope, actually was speaking to them a couple of days ago, I hope that they will build a Like branded exchange module so that people could have that option in the portfolio as well.
So if I have an Ether wallet, I can buy into any fund provider?
As long as the fund allows investment, because it's up to the person setting up the fund if they want to allow people to invest or redeem shares. And it's open-ended fund structures to start off with, which means that every time you invest, a new share is created, and every time someone redeems, a share is annihilated.
So in order to onboard all the other blockchains, you need development of the other blockchains. And if so, how do you make them to do it? I mean,
Which
you have
other
a-
project?
Well, like blockchains, like Bitcoin and so on. If they want to, you want to have them on your internet of blockchains, but do they have to change something for that? And if so, how do you get them to do that?
With Ethereum, they might not have to change anything. This bridge might be able to be built. With Bitcoin, it's a bit harder, but not impossible. But again, this is still too early, and that's why we can't say anything for sure yet. We can only explore the possibilities and make sure we have like a bit of a reserve fund to make sure that we're able to, when there's certainty in the space, we can kind of go with that certainty.
Regarding the open source approach that you have, did you consider moving your open source project to an open source foundation, or you're just happy to host it on GitHub and have the developers that should join? Basically, you have then to be kind to let them in if they don't really want to contribute, or would you like to give them more stability long term from the governance structure?
I've actually never heard of an open source foundation, so I'm going to let Rito answer that.
Yeah, I was not really aware of it.
Well, I think the big ones are the Linux Foundation or the Epic Foundation, Apache Foundation. So basically, these things, they provide the governance for creating communities that developers feel comfortable. So their project does not suddenly disappear, or if they really want to contribute and if they're good, then being at such a place, it's very hard to not make that commitment.
That's a very interesting idea. So
long-term security, that if they build on top of that it will not go away in 2 years' time.
yeah, the truth is we haven't considered it, I think, but I think it sounds like a pretty good idea. I do have the Linux book in my next book to read, actually, though, on my because I was kind of yeah.
If I want to invest in 10 currencies,
Yeah.
provide for wallets, and what about the security of these wallets?
If they're all in, yeah.
There are no wallets like
Yeah.
Mellon is one.
Sorry?
There are no wallets like you can Meetup is kind of.
We would be interested in this project.
It's purely code.
That's usual. They should be pictures. You should.
Any more questions?
No, because we
Where are you?
In Zug. Yeah.
Of course
In
you are.
crypto value. So yeah, keep in touch. We're just next door. But seriously, if any of you are interested in contributing any kind of human capital or ideas or thoughts, we would very much like to hear from you afterwards. I think there's an apéro or a drink. Very kind of you guys. Thank you very much for your attention, and look forward to meeting you now.